Depreciation forms part of the profit and loss forecast of a set of projections you prepare for your small business. And our Cashflow Excel template makes this very easy to do. We're looking at the Info tab. You can set your own rates of depreciation, but there are some default settings in the Cashflow Excel template. Here you can see we've got the rates of 0% through to 33%, and you can quite easily type over and put your own rate into one of these cells. The other setting is whether the asset is depreciated, in this case selected none, or reducing balance, or straight line. And these are just standard rates of depreciation. So this list here are all the depreciation rates that you can select. A little bit further down on the Info tab, you have a list of 8 fixed asset types. The names of these can be changed further down on the Info tab, but let's leave those as they are for now. Over here you can select the depreciation rate that is applicable for your business for that particular asset type. Simply select on the drop-down menu and scroll down and select the rate you want. In this case we've set freehold property to none or 0. Let's take motor vehicles because that's the asset we're going to be adding. We've set that to 25% reducing balance. So let's enter an asset. I'm going to say the asset is purchased in month 1 of our cash flow forecast, and the original cost of that asset is going to be £10,000. I'm not going to add VAT to it because in the UK the majority of times you can't claim VAT back on vehicles, so I'm going to leave that as a 0 for now. If I go to the fixed asset schedule or report, you'll see that in the month of December, which is the first month of our cash flow forecast, under motor vehicles we've got the addition of £10,000. Then if we look under the depreciation, starting in month 1, or December 2017 in this case, the motor vehicle, the depreciation has been automatically calculated. So you can see in December £209 is included on the fixed asset report, and £204 in January 2018, and so on. This information is brought straight into the profit and loss account. There's a line on the profit and loss account headed up depreciation, and you'll see the same figures just pulled straight through onto the profit and loss account automatically. The depreciation doesn't affect the cash flow, but on the cash flow you'll see the capital expenditure of the £10,000 detailed in December 2017. However, included on the balance sheet will be your cost and accumulated depreciation. So in November 2018 we can see the cost of the asset £10,000 and the accumulated depreciation at that time of £2,237. This calculation will carry on throughout the forecast period until such time as the asset is sold. If we have a look at the monthly projected balance sheet, you'll see that the £10,000 asset is entered in December 2017, and then the depreciation starts in December of £209, and you'll see that it accumulates through January 18, February 18 and so on.